Hi, everybody, and welcome back to EBNet Stream. As you know, I've been thinking over the last couple of days around the possibility of sanctions and tariffs and how these would affect retirement fund members. So I thought I'd catch up with Sanisha Packirisamy, the chief economist at Momentum Investments, and perhaps have a chat with her. Welcome to EBNet Stream, Sanisha.
Thanks so much, Natalie.
Sanisha, I wonder if you could share with us your thoughts around the possibility of sanctions.
Sure, Natalie. So I think, before we go into the sanctions talk, I think we need to take a slight step back because I think it does happen in levels. So I think the first level is to talk about tariffs. And of course, the biggest sticking point here is that we belong to the African Growth and Opportunities Act, and we do get preferential treatment on a number of our products that are destined for the US economy. We think by and large it will not be devastating. It will still be quite disruptive if we do lose these benefits. And it's increasingly looking likely with the souring of the relations between the United States and South Africa that by the end of the year we are unlikely to have those AGOA benefits in our pocket. Of the top sort of four exports under AGOA, we are most concerned about the motor vehicle industry. It's a very concentrated industry with about two key dealers that export into the US market. Following that is aluminium, because about a quarter of our aluminium exports are destined for the US economy. And we saw the recent announcement in terms of the aluminium tariffs coming through. After that, we've got iron and steel. And then the fourth one being your edible fruits and nuts. And of course, in the other category, things like wine products. Now, that's really on the tariff arrangements, but there are broader implications for things like growth and employment when you can consider that American firms do play quite a significant role in hiring workers in South Africa. So the American Chamber of Commerce suggests that between 220,000 and 230,000 workers in South Africa are actually reliant on American firms. Add to that, there can be, wider implications for things like our current account deficit, given the financial implications coming out of such a dispute with the US economy. We know that the US economy funds a large portion of our current account deficit. I think other areas where we're less concerned, for example, the just energy transition, of that $13.6 billion dollar funding, quite a lot of that actually comes through from Europe and the World Bank, with the US playing quite a minor role, a couple of millions there. So that's one area, fortunately, where we are going to be less impacted. But I think in terms of just setting the scene for our global relations, any sort of negative news that could potentially get to the level of sanctions would be quite devastating. Now, you mentioned sanctions. Of course, there are various types of sanctions. You could be sanctioning individuals, which has more sort of indirect impacts on a sovereign. And then you get sanctions at a sovereign level. Now, sanctions at a sovereign level would be very devastating for South Africa in terms of its growth, the currency outlook, employment outlook, inflation outlook. And then, of course, if you have sanctions on individuals, and there was a little bit of this in the press more recently, there are indirect impacts given that if there are businesses that are associated, for example, with these individuals, we could see that business development there is altered more on the negative stance. And so there are more sort of indirect impacts that come through from that line. However, bottom line, I think we're at the beginning of this, development with sort of the tariff level of things. But as we progress and have more financial market implications, employment implications, and then, the ultimate sanctions, that would be quite negative for the South African market.
Thanks for that. I'm not going to try and put you on the spot, but I really am going to put you on the spot. What is your view on the likelihood of tariffs being imposed?
So we have seen that if we look at the whole Trump administration, the steel and aluminium tariffs as an example, this was already done in 2018 by Donald Trump. I think he's quite tough on issues around the protectionist stance. Remember that putting on tariffs is more of an executive order, so that's something a bit more easier to implement than, for example, cutting corporate taxes in the United States, where you do need to get both chambers of commerce to agree. think there's also a little bit of pressure on the current US administration to push through quite a lot on their agenda before the midterm elections. The part of the Making America Great Again is to really ensure that, trade routes are consolidated, that the US market grows. And I think that what we've seen out of Donald Trump so far and what we've seen out of his first term in the presidency suggests that, tariffs could actually be forthcoming in that regard.
So I'm hearing you say AGOA more than likely, tariffs probably likely, and sanctions unlikely. Is that a fair summary?
No, I think I would say that's quite a fair summary. I think, sanctions are just, a step too far at this stage. Also, if we take, South Africa in the context of, the US administration and what they're really looking at, I think they do have bigger fish to fry, so to speak. So I think, we might actually, lose our place in the spotlight, and there may be other players that then get that attention, the likes of Canada, Mexico, of course, China. There are still developments playing out with regards to Russia and trying to wind up the war between Russia and Ukraine, further developments in the Middle East. So I think, it will all depend on, the list of priorities that the US administration is currently focusing on. And because South Africa is a relatively small player in a global context, it may mean that there are other priorities that push us further down the list.
Okay, so for the average retirement fund member who is reading a lot of the hype around, oh my word, we're being exited from AGOA, oh my word, tariffs, and oh my word, I'm not going to be able to enjoy my McDonald's and Starbucks. What would you recommend that they be doing with their retirement fund investments?
Well, we always recommend that you speak to your financial advisor first before making rash decisions. And we saw this playing out in COVID, where we did a bit of behavioral work, and it showed that people that made, very short-term decisions on information that lacked at that moment in time does cost you in the long term, because some of these investment mistakes do end up compounding and having quite a big impact on your portfolio at the end of the day. We firmly believe in the principles of diversifying the portfolio, especially when we run our global balanced portfolios. We do look at, South Africa as an investment destination relative to global investments. Now, if we look at our asset allocation as we stand today, we do think that the relative valuations globally are currently still in favor of South African investments. If we look at the South African equity market on a forward price to earnings ratio, and penciling in a reasonably robust return, we still think that the South African equity market is under-owned and cheap. And just to remember that, when you invest in the SA equity market, it's different to what the GDP composition is, because a lot of our firms are, in fact, multinationals and dual listed firms. And so that also plays a role. So often people say, the economy is doing very poorly. Should we disinvest from the SA equity market? And the two don't really go hand in hand because of the composition of our SA equity market. If we look at SA bonds as an example, we think that the real yield also offers value here. We think that, there is a fair amount of bad political and fiscal news already priced into that high bond yield. And that bond yield is actually comparatively quite good relative to history, relative to emerging market peers, and relative to its developed market peers.
I'm so glad you touched on the point of offshore portfolios, because I was going to ask you, as an individual investor in a retirement fund, I'm looking at all this unfold, and even with my own money, I'm thinking, jeepers, should I be putting more offshore in the anticipation of rand devaluations, et cetera, et cetera? What would your advice to me be around that?
So we tend to always look at the underlying fundamentals of each of the asset classes instead of just making a call on the currency, because we know that currency volatility is inherently high, and particularly in a period where global market volatility will continue to persist at these high levels on the back of uncertainty around Trump policies. So again, we'll bring it back to the valuation argument, saying that SA equities in this market, are cheap. Even on a structural basis, we know that in a global emerging market benchmark, investors, don't own a lot of South Africa. So there is still that structural underpin for SA equities.
Thank you. Thanks for that sage counsel. Thank you very much to Sanisha Packirisamy, the Chief Economist at Momentum Investments, for sharing your thoughts with us today on these topical issues that are going around at the moment.
Thanks so much, Natalie.